Hey guys, what's up? Welcome back to another video in the Smart Money Bootcamp, and today we're going to be talking about Fibonacci retracements. I'm going to take what I see a lot of people are calling complicated, and I'm going to uncomplicate it for you, because what I am not going to do is I'm not going to go deeply into the study of Fibonacci, because frankly, it's not important, and it doesn't affect the way that we use Fibonacci in trading. So let's get right into it. The 718 to the 886 is the smart money kill zone. That's my smart money kill zone. In trending scenarios, oftentimes price will also respect the 618 fib level as well. So just to reiterate, this is the 886 to the 718. It only shows to the 0.71 one here, but this is the 886 to the 718. This is the kill zone, and then the 618 is right here. This is your Fibonacci retracement tool right here, and I'll show you more about that on the next slide. But this is named after the Fibonacci sequence of numbers. We do not use fibs in the way that the typical retail trader does. I'm not even sure how retail uses it anymore, but we only need to understand how we use it in smart money. In Forex, Fibonacci retracement is a method of technical analysis for determining support and resistance levels. Retail traders use Fibonacci different than smart money traders do, in my opinion. They use it strictly for support and resistance. Smart money is simply measuring how deep the retracement is. I'm going to say that again. Smart money is simply measuring how deep the retracement is. Remember, support and resistance is still a thing. We just don't trade support and resistance alone in smart money concepts. So here's the smart money fib zone. This is my smart money tool right here. This is the way that mine is set up here, and I will show you how to set that up when we get over to TradingView. But this is where your anchor point would be. This would be the top, and then this would be your smart money kill zone right in here where this gray box is. From the 886 to the 718, you can even refine these levels even more to maybe just a 788 to the 886 or the 788 to the 71. And then right here is the 618, like I mentioned, that I like to watch in trending markets. Many people overcomplicate fib retracements. In smart money, all we are doing is measuring the retracement of the price leg that we are looking at for entry. In other words, if we are looking at an order block that is waiting for retracement, we in smart money know that the banks and algorithms like to visit specific levels. The 718 to the 886, keeping the 618 in mind in trending markets. When thinking about retracements, think about percentages. Okay? For example, the 718 fib level is equal to 71% of the entire price leg that you are measuring. So the 788 is 78% retracement. The 886 is 86% retracement. So what that means is if the price comes to your 886 level, that means that price has retraced 86% of that entire price leg. And I will show you that on the chart as well. Fib levels are not a must-have, but are a great confluence when looking for quality trades. When drawing fibs, you need to draw from left to right. In bullish scenarios, you draw the fib from the bottom of the current price leg to the top, and vice versa for bearish scenarios. All right, so when do we use fibs? These are the steps. These are the things that you need to wait for, in my opinion, to use your fib. 1, you identify your order block. 2, you got to wait for price to break a previous structure. 3, price makes a new high or low in the market. 4 is when you draw your fib and see how that price leg pans out. And 5, you wait for the retracement or pullback into the fib zone, hopefully lining up with an imbalance or an order block. That's really all the actual information I need to give you. Like I said, this is not complicated. It's just you're measuring the price leg for the retracement, because price likes to pull back a certain amount, moving from premium to discount. But we're going to hop over to the charts right now, and I'm going to show you some examples. All right, so here we are back over on TradingView, and I got Euro USD pulled up on the daily right now, and I only have this pulled up because I want to show you this right now. So this is where we are at currently in the market, all right, and right here, this is your fib tool. If I actually escape and go back over here, you can find your fib tool by going over here to one of these buttons, and it should be the third one down. Maybe not, it could be somewhere else, but if you open the sidebar here, you got all of these options right here, and if you didn't know this, you can star it, and it will actually come up on your toolbar over here, your favorites toolbar, okay? But this line, this icon right here with the dot here, and the couple lines, that's your fib retracement tool. You do not need the trend-based fib extension, okay? So what you do is you click on your fib tool. This is the bottom of this price leg, okay? From here to here is where I'm going to draw this. Okay, and as you can see, right here is your smart money fib zone. And it's lining right up with this order block right here. And the reason I drew it from this down here to this top up here is because this is where price took off. This is the beginning of this price leg. And at one point you would have anchored it here while price was retracing, but as soon as it went up and made another high, you would continue it up. You would extend it up because price hasn't retraced back into this zone yet. And real quick, take a picture of this or however you want to do it. But right here are the levels to how I set up my fib. You got the 618, you got the 0, you got the 1, you got the 71, you got the 886, and the 788. And you can do your colors however you want. Alright, so just looking at this market here, I can see one. And eventually you will be able to see fib retracements without even pulling the fib. You'll just be able to look at it and tell that it respected the fib level. And I see this one going to the bearish side. And this one is going to be a deep retracement, but it's going to be a valid retracement nonetheless. So if you pull in here, this is where the price leg starts. It comes down. It takes out liquidity. That's one of your requirements to draw the fib. Okay. And then we retrace back up and we completely respect the 886 level. Yes, it wicks through it for a second, but for the most part, it respects it. And then it continues to go. We're actually going to jump down time frames. We're going to go to the 4 hour now. And so you can draw a fib from pretty much any price leg, all right? Like, just because I drew a fib from here up to here doesn't mean I can't draw it from one of these lows as well, because this is still a price leg right here. This order block broke this previous structure over here, so therefore I can also pull a fib from here and take it all the way up to the top and see that we've already even came down into the fib zone, okay? And it rejected from there, and now it's going to the upside. So we may see a return into that zone, and we may not. We've already seen a return into that zone. All right, so here is another one, I believe. Let's draw it out, see what it looks like. So you draw from left to right until it retraces back in. It comes right into the kill zone and rejects. If we take a look at this one, I'm not sure if this one actually respects the fib zone or not, but we're going to test it out left to right. And it goes through it a little bit, but for the most part, it plays around in the kill zone here and moves on. Okay, I'm pretty sure this is one. So from here all the way down to this level. Okay, look how it keeps going to the 886 on all these examples. I didn't do that on purpose. But once again, price breaks down. We don't get the retracement until all the way here. And then it goes right to the 886 and rejects. And sometimes you will notice that the fib does not line up with the order block. But in this case, if you took the bottom of this order block right here, it does line up with it. All right, so here we are on oil. I just wanted to change charts. I didn't really want to go back too far in Euro USD. So one of the first things I want to draw here is, so we got this entire price leg from here to up here, right? Before there's any retracement. This doesn't matter, okay? I want to point this out to you. Unless you were drawing this from here to here, this retracement doesn't matter. Once it moves to this high, you got to anchor it up here, okay? And then this is in the fib zone, but that does not matter because this has already retraced before we got up here, okay? Once we get to here, we want to measure the retracement from this zone down here to this zone up here. And we want to measure the entire percentage that it pulls back. And as you can see, we pull right back into the zone here and we take off. I feel like this one may respect it, but I'm not sure. Yeah, this one should respect. All right. Once again, comes right up to the fib level and rejects. Right inside of all this imbalance here, completely fills it up and then goes to the downside. Just like this. So I can see there's probably all kinds of fib retracements in here that might work and some of them might not. So let's test this out. We're going to draw from here to here. Comes very close to the 618 but does not quite get there. And some people draw their fibs from bodies to bodies. I do not. I draw from wick to wick because the wicks and the bodies are going to change depending on what time frame you're on. I simply just measure price. That's the way I go. That's the way I do it. And so we'll move from this one down to, I guess, this one right here. Comes right back up into the fib zone and then drops. Okay, so this one comes all the way down here. And we get no retracement at all on this. Let's see this one right here. So we got price that broke through all this structure here. So we can now measure this one for the Fibonacci. Pull it up to this high right here, comes right down right to the 788 and takes off. This one here might be a trending market one or a 618 one. Comes close to the 618 but does not quite get there. Alright, so we pull from here to here. That's one price leg. Comes right back into the fib zone and drops. Here's an example where price comes back to the 618 and then continues to fall. And guys, at this point, I'm beginning to become redundant like I do in every video because we are still covering basic information. Alright, these are just simple components to smart money, and this one did not work out. We are still covering the basics of smart money. These are all components that you need to understand. You need to understand order blocks, imbalances, supply and demand, Fibonacci retracements, and more. We are still just getting through the basic components of smart money. To some of the people that are waiting for this to get good and super interesting, it's going to. But remember, this is a foundational course, and I want everybody, including beginners, to be able to watch this from start to finish and to be able to have a good foundation into smart money. I have also stated that there is going to be so much more after this Smart Money Bootcamp. Basically about application and using these concepts day in and day out in live time. So hope y'all stick around for that. I hope y'all stick around for the rest of the bootcamp. And for this video, I'm done. I'm out of here. I'll catch you on the next one.